Afternoon everyone, I want to do a quick update on natural gas. The market will open in a few hours time and we're going to be wondering whether it's going to gap up or gap down or do nothing. I've got a chart on my screen and now people get quite upset with me when I tell them that natural gas could go a bit lower. But it's not me that controls the natural gas price and it's not most people. There might be some multinationals that are involved in it, of course, and governments and so on, and price fixing and geopolitics play a huge role. But those are mostly out of individual control, and this market is determined by things like the weather and demand from industry and geopolitics, consumer demand from homes and that sort of thing, and cooking demands in restaurants. So all sorts of things affect the price of natural gas, including what goes on in the general economy in the world. And when the economy generally falters and fails and we experience depressions and recessions and so on, the price of natural gas will come down as demand ebbs and wanes according to international demand, and also where that demand is taken up and supplied from, depending on whether it's from the US, from the Middle East, from the Baltic regions and so on, and even the Far East. So all sorts of factors completely out of our control, and we have to follow price action to determine what's going on. One of the ways that we can look at price action is by looking at what happened in the past. And what I've drawn on this chart is a fractal. This fractal here is drawn from this region starting in June 2020. And if I zoom in, you can see where it comes from. We had a move down, a move up, bit of a dip, a big move up, a much bigger dip down, and then a rally all the way up to about 3.4. So this pattern starting in June 2020 is where I've drawn this fractal from, and I just use this bar pattern tool on TradingView, which you can use as well. It's as simple as choosing the pattern, clicking on where you want to start, clicking on where you want to end, in this case right at the top here, and it draws this fractal in for you. Seeing as I've already done that and I've copied it across to where we are today, we won't do it again, and let's have a look at what we've got. Now, we've had a very, very similar pattern. It's not perfect, but it's quite similar. And although this fractal certainly won't repeat perfectly, it'll give us an idea of what could happen, what has happened before. Notice that even though in this previous event in 2020, we got this big start off the bottom, very similar to what we've had here, consolidation and a big move up, we pulled back all the way down to this sort of level here. Now if I put a Fibonacci from the bottom to the top, you can see that also coincides with 78.6% Fibonacci level. So it's a pretty important and key level. It's also the big round number at 2, and it's also the dividing line between the bullish and the bearish overall bargain basement prices below $2 and then moving up above $2. So it's a really, really important number, and the fact that it's a 786, the 100-period moving averages down here, this is a day chart on the Henry Hub, by the way, and that circle that I've drawn here is a really important zone. I want to remind you of what happened last time. If we just skip back there again, you can see how similar it is. We had a period of consolidation, a move off the bottom, bit of a dip, faffing around a bit, and then this big pullback to about 78.6%. In this case, we got down to 1.8, but we're starting from a slightly higher level now. Indeed, if I draw a fib from the bottom to the top, you can see that we didn't quite get to the 786 fib, but we got pretty close to it, somewhere in between the 618 and the 786. All right, so let's go back to where we are today and see what could possibly happen. And if we do follow this fractal and we do gap down, we'll be looking at an area down here. 61.8% Fibonacci is here at about 2.17 or 18. We talked about that in the last video, if you remember. And if we do have to get back down and follow a similar pattern to this last fractal, from 2020, we'll get into this zone here, just around about the $2 level, maybe a couple of cents above that, maybe a couple of cents below that, but in that region. So although I think that's what could happen and almost is possibly likely to happen, we are long from where we are currently at the moment, which means I'll have to hedge my position. Although we're not too far away from it, we're still 30 cents away from $2. So I'll be inclined to hedge my long position, which is not a full-size position at this point, but nevertheless, I'll consider hedging it. And then when we get down to about $2, if we do get down there and we see signs of reversal, I'll take those short positions off, the hedge positions, and then add to the long side, using the profit from the short trade to cover the risk on the additional longs. I hope that kind of makes sense. Having said all of that, however, we may just move up, we may gap up over this weekend in a few hours time, and we may not need to hedge or do anything like that, and we could carry on moving higher. The interesting news is that if we do follow this fractal, the first move should take us back up to this previous high, and then we could get moving up a little bit later on in the year towards this 3.8 and possibly even the $4 level. The end of this fractal move, if we draw it like we have done now, ends around about mid-August, so about 5 weeks from now. That's at around $3.80 or $3.90, and I think we'll probably stall there and then dip down quite significantly and potentially surge up above $4 later in the year. If you found this video useful, I'd love your subscription and your thumbs up, and I'll see you in the next video.
Natural gas fire burning bright, crypto's rising, taking me to new treasure trove. Hit the jackpot, feeling in the groove. Don't worry about nothing, just let it ride. These trades got me feeling right inside. Screens glowing green like a money machine. Rocking the market like a fever dream.